Now, when it comes to dividend investing, I'm all about single stock picking or even partaking and buying into a small amount of ultra high yielding ETFs in order to potentially generate a ton of cash flow a lot sooner. But that's only if a few things are done previous to this. What I'm talking about is building a strong foundation for your portfolio before you move on to single stock picking or even buying into ultra high yielding ETFs. Because if you build a strong foundation for your portfolio and sort of have that as the backbone, even if there's some market turbulence, even if there's some market turmoil, you're still going to probably be okay when the storms come, if and only you built a strong foundation to start with. Now, that's why in my long-term portfolio, although I own tons of different names of different stocks and ETFs, I do have certain foundational names like my 1001 shares of Apple stock, which I've held on to forever now, or tons of other index-based ETFs that offer exposure to strong high-performing indexes that have been doing great historically pretty much forever. Now, in this video specifically, I want to go over two foundational high-income oriented ETFs that I think are great pillars for a long-term portfolio if you're looking to build a strong foundation but also want high income generation right from the start. I'm talking about the NEOS Nasdaq 100 high-income ETF and of course the NEOS S&P 500 high-income ETF, two of my favorite positions across my entire portfolio. I'm going to share with you guys why these two ETFs could be great foundational pillars for a long-term portfolio, and then share with you how much I have of each of them, how much they pay me per month, per year, etc. So I promise you, if you're a dividend-focused investor looking to build out some higher income foundational positions, definitely stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. So first, let's talk about why I think SPYI or QQQI are ETFs that could be great foundational positions for a portfolio. Well, first of all, for SPYI, it offers exposure to the S&P 500 index through a high income strategy. And if we look at the S&P 500's performance since inception, this index has done just about as good as anything else across the market over multiple different timeframes. Now, if we're talking about the NEOS Nasdaq 100 high income ETF or QQQI, this ETF of course offers Nasdaq 100 exposure through a high income strategy, which if you look at the Nasdaq 100's performance, it goes without saying that this index is definitely something most investors are probably going to want to have some exposure to. Now, of course, there's going to be single stocks throughout the market and even other ETFs that probably have or will outperform both these indexes over time. But as far as building a strong foundational position and then building on upon that, I think the S&P 500 and the Nasdaq 100 are two great places to start. Now, that being said, just because these two NEOS ETFs offer Nasdaq 100 and of course S&P 500 exposure through a high income strategy, don't mean that these are the two only to do this or the two best maybe. But in my opinion, these are two of the best ETFs to offer basically everything I'm personally looking for as an investor. But also, two ETFs are going to build a strong foundational position in my portfolio. So first of all, talking about SPYI, this of course offers exposure to the S&P 500, which I consider my favorite index throughout the entire market, and this is for multiple different reasons. But this ETF as of right now offers over a 12% distribution rate, monthly distributions which are around 50 cents per share per month. And side note, this ETF, even though offering over 12% distribution rate, has not decayed whatsoever over time. It's even grown a little bit. And sort of as a bonus, this ETF along with the next one pays a lot of their distributions in the form of return of capital. And the way this ETF works, it says the fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 index and implementing a data-driven call option strategy. It then says actively managed by NEOS, the fund seeks to take advantage of tax loss harvesting opportunities in addition to utilizing SPX index options classified as Section 1256 contracts, which are subject to a lower 60/40 tax rate. Now, lastly, it says the fund utilizes a call option strategy that may include both selling and purchasing SPX index options, which may provide some upside if the market moves fast. Now, the NEOS Nasdaq 100 high income ETF is basically the same exact thing. The only difference is, of course, with this ETF, you're getting exposure to the Nasdaq 100, which is higher beta, which is partially why the distribution rate is much higher. Now, with this ETF, you're talking around 60 cents per share per month on average, more or less. There's a ton of income generation potential, even with a relatively small amount of money invested also. So both of these ETFs offer index exposure, which I personally like, especially if you're building out a portfolio just from the start. Both of these ETFs have offered high income generation from day one, no share price decay whatsoever, and both offered strong total returns. around 14 and 19% per year since inception. Now don't get it twisted, if and when the Nasdaq or the S&P 500 drop in price, these ETFs that offer exposure to both of those are going to also drop in price with it. But the cool thing about ETFs like these, because of the cover call overlay, the option strategy, even if the Nasdaq 100 and the S&P 500, let's say, trades more or less sideways over time, there's still going to be a ton of income generation to be had with option income strategy ETFs like these. Now I told you guys that I like both of these ETFs quite a bit. As of right now, I have 1,490 shares of SPYI across all my portfolios. As of right now, SPYI costs around $51.44 per share, so that's a total value of around $76,700, and that pays me around $745 per month in income. Now I also have tons of the Nasdaq 100 version. I have 942 shares. The price per share as of right now is $52.73, which is around $50,000 in total. That means that just between these two ETFs combined, I have around $126,000 invested into both of them altogether, which pay me around $1,300 per month in income. Now, like I said earlier, there's tons of other ETFs that also offer S&P 500 and Nasdaq 100 exposure, even ones that offer a high income strategy around both these indexes, which I also own in my portfolio and I talk about all the time on my channel. But honestly, the NEOS, SPYI, and QQQI are two of my favorites across the market as of right now. So now that we talked about building out a strong foundational position in a long-term portfolio around the S&P 500 index and of course the Nasdaq 100 index, and we talked about two of my favorite ETFs that offer this potentially, I lastly, most importantly, have a question for you guys down below. When it comes to building a strong foundational position in your long-term portfolio, what are some stocks, what are some ETFs that you're currently utilizing for this? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like in it, subscribe, and I'll see you guys in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.